thanks everybody for joining the last session of our three-part "Tis the Season" webinar series. We have a really good session here to finish up today. As we head into 2024, what are the topics that are on Treasurer's minds for technology improvements? We'll talk also a little bit about how to build your technology roadmap, something that will lead to a lot of success for your company heading into 2024. And we'll discuss this from the standpoint of just general industry trends that we've been noticing, as well as bring in some survey results from a recent survey we actually launched with Strategic Treasury. So looking forward to today's conversation. I think we'll be able to cover a lot of ground during the course of the discussion. And before we head into the questions here, just want to take a minute here to introduce my co-speaker, Craig Jeffery from Strategic Treasury. And Craig, maybe you could take a minute here just to sort of introduce yourself to the group as well.
Yeah, I'm Craig Jeffery. I'm the managing partner of Strategic Treasury. We're a consulting firm and a research firm. I'm based out of Atlanta. Our team's spread throughout the U.S. Yeah, like John said, we've done some research together, and I'm glad to be on this discussion. The naming of the series is pretty incredible. Tis the season. I guess if your initials of your company are Tis, you found a good way to use it.
Yeah, exactly. So, yeah, maybe just start off here with a very, sort of general question in terms of, the trends heading into 2024. What really are we seeing for, technology focus for Treasury organizations heading into next year? Are there certain areas they're looking to invest in, certain topics that are becoming, sort of more and more prominent as we move into the new year?
Yeah, there's quite a bit. The market's still doing pretty well. Well, I think the overall economy is it's positive in North America. Much of mainland Europe, of course, is still positive. Not fantastic growth, but good for technology providers. A couple areas that are probably the biggest growth expectations are payment factories on the small to medium business market, and treasury management systems in the small medium business segment as well. Both of those look to have a doubling of growth over the near term. That's good news. That's more on the line of the democratization of some of the technology. John, a couple other things there would be bank fee analysis. They plan to use that, start doing that more formally, tracking their expenses, probably largely driven out of the overall economy. And then on the aggregator side, which is payment factories are part of aggregators. It's a space where some of TIS's set up and solutions sit in there. 70% growth overall, but 100% growth in North America. So a lot of areas with significant growth. There's more as well, but those are some of the key areas. People are trying to get the efficiency and visibility. Counterparty risk plays a role. Payment security plays a role. Those are some key areas, John.
Yeah, I think definitely some interesting trends in there in terms of smaller businesses starting to adopt technology at a more rapid pace. It just seems as things move to the cloud and software applications get more modular. You can kind of pick and choose what functionality you want. Becomes more affordable, more lightweight, easier to implement. So we're definitely seeing a trend of that, throughout the treasury management system type space as well. But as you alluded to, I was interested to see the growth that's expected in the treasury aggregator space, particularly in North America. It seems like that's really a topic that's taking off, where people are recognizing, the value of sort of having a solution in place to address bank connectivity and payments on its own within the North American market. Something that was pretty prevalent, I think, in Europe and Asia, in prior years, where they're a little bit further advanced in digitalization of payments and things like that, right? But starting to become a big topic in North America as well, and not just for the largest organizations either, even down market a little bit for mid-market companies and things like that. So yeah, definitely some interesting results coming out of the survey. And the one other one is cash management and cash forecasting just continue to be a big trend, with obviously rising borrowing cost and a lot of organizations looking to reduce interest expense or maximize interest income. That's always going to be a big topic. People are always trying to look around corners and manage exposures and risks and things like that as well. So we're still seeing a big trend, I think, towards cash management as well heading into 2024. Yeah, maybe going into the next topic here, what do you think are really driving these areas of emphasis that we kind of, called attention to in the last question here? Is it macroeconomic conditions? Is it, sort of people, wanting to explore new emerging technologies and things like that? Is it just a change in the needs for Treasury departments in terms of what software they need? Are there any trends that are kind of, I guess, driving people to emphasize these particular topics?
Yeah, it seems to be. I mean, summarizing every individual company is a little bit challenging, but certainly one of the things that are pushing people to it, the macroeconomic conditions that drive to for efficiency are certainly pushing people towards that. Counterparty risk and being able to cap full visibility, manage their exposures. Those are driving some of the areas like we saw with Treasury aggregators, the ability to see everything, to calibrate that risk. So that's good news for the aggregator marketplace, for the Treasury management system marketplace, and the elevated era of more analytics is not subsiding. I mean that pushed up in 2007, 2008. It got revitalized during COVID, and then with the mini bank challenges during the earlier part of this year, have brought more of those things to the fore. So nobody's saying we need less visibility, we need slower response times. It's always more. And then on the fraud front, John, I know you and I have talked about that a lot. Payment fraud, cyber fraud is massive, and when you have disparate systems, there's a lot of sneaker net or people rekeying from one place to another, lots of points of failure. And so putting in some of these tools that help standardize consistent, make it consistent, and protect payments is a really significant effort on many companies. There's too many points of exposure. The criminals are making too much money. People need to lock down their payments, and that combines with, as you know, all of the new payment types that are coming online, faster, more information, new formats, and so some people have to make changes to support those. There's business cases for it, so all of those contribute to it. Depends on what the company is, which triggers the particular buying decision, but a lot of them are contributing. It tends not to be a single driver.
Yeah, I think I'd agree completely with that. I mean, that's really what we're seeing as multi-factors kind of coming in here to drive a lot of these technology investment decisions. Obviously, some really interesting emerging technologies that are catching Treasurer's attention, like things like AI and APIs, which we're going to talk a little bit more about, I know, later in the conversation here. But also the need for better analytics, like you called attention to, this theme that emerged a few years ago, where organizations started really thinking about data and how to use that data to drive really good analytics within their companies. That persists. I think that's definitely a driver of what we're seeing in the market, because technologies like Treasury aggregators or payment hubs or things like that are really intended to break down those organizational silos that exist, that sometimes prevent organizations from really being able to bring their data together in a really cohesive way to then run good analytics on top of it, right? So it definitely seems like people are starting to favor more technologies that help them bring together systems, bring together data, bring together people in a collaborative way. And I think a big component of that is to drive better analytics, but certainly risk management aspects as well. There's plenty out there to manage for risky variables for treasurers, and fraud is another big one as well. So just a whole bunch of different things that are really sort of driving some of these decisions around technology investments. And maybe we take the opportunity here just to talk a little bit more about a couple emerging technologies that I know is on everybody's mind heading into 2024, and that would be both open banking APIs or even system integration APIs, as well as artificial intelligence and machine learning, which became a really massive topic that a lot of treasurers had a lot of interest in, going into 2024 and during the duration of 2023 as well. So maybe we can talk a little bit about AI and machine learning first, just in terms of what are you seeing for trends, use cases starting to emerge around those technologies now?
One of the most interesting things about some of the research is to see how optimistic people are about adopting technology, and then the reality, how quickly do they make those, do they bring that technology on board? And in almost every case, let's say a certain percentage of companies say we plan to do this or that in the next year or 2 years. It's almost been a maxim that it's 60 to 70% of those companies actually do. Like, so there's always a discount from what people say. With AI and machine learning and even APIs, that trend is different. It's higher rates of adoption. Now some of you are probably saying on the API side, it's like, oh yeah, well we were able to adopt one through our provider, or two, but it's not widespread. We didn't replace everything. It wasn't API only. It was API where it made sense. But what's important is the adoption rate's higher than it was expected. And same thing with the use of artificial intelligence artificial intelligence and machine learning, it's not been higher for companies building, their own internal AI network that's driving certain behaviors and building their own version of Chat GPT on premises, but they're leveraging what vendors are doing. So tech firms like your firm and others are adding this type of capability into the system. And so now everybody who's in the user environment can turn on and use this type of functionality, whether it's for cash forecasting, quality control, fraud management. Those are happening. So both APIs and artificial intelligence are above trend. So it's at a premium as opposed to being discounted from what expectations are. That is that's pretty dramatic in the Treasury world. We've been doing surveys for 13 years, and I don't remember ever seeing that.
Yeah, it does. It definitely seems like AI is going to be one of those transformative technologies that really, completely changes the way Treasury, a lot of people work, but obviously the way the Treasury applications work and the level of analytics that organizations can really get. We're seeing it, and I think the survey results alluded to this as well. The two kind of primary use cases treasurers are identifying are cash forecasting and fraud detection, which are two obvious ways you can use AI. But within the cash forecasting space, you can use it, to be able to get deeper level of insights, analyze payer behavior, take your forecasted data and understand based on trends, like what will really happen, based on the actual historical transactions and the way that those cash flows have moved in and out of my business previously, which is a huge advantage of treasurers, obviously, who are always looking to see around corners and understand the risks and where the variability in their forecast might exist. So it's definitely a good application of those technologies that exist today. And I think there's a lot of interest in generative AI as well, just to speed up analysis and decision making. If you can have something like a Chat GPT, for example, for your Treasury application and ask it to perform a scenario or a particular analysis and get that result back quickly, that saves you all the work of crunching those numbers on your own. The caveat there is always that, if you're getting these so-called AI hallucinations a little bit here, can you rely on those outcomes? Can you rely on that data? Obviously it's a new technology that's still emerging, and the results of it are fully reliant on how you prompt it and the amount of data it has access to historically. So that seems to be the main challenge for organizations is, do I have the data to really be able to take advantage of a lot of these AI machine learning type solutions in a real reliable way? But I'd agree the trends are really interesting around those technologies in particular.
We just launched a survey. We're gathering information on AI and generative AI in Treasury, and I appreciate you talking about hallucinations. And it's like it'll take and make a reasoned assumption about what's going on, and so you need someone skilled looking at it. John, I think one of the other things too on AI is you don't want to push confidential material into one of the public engines for that. So there's certainly some of the internal engines you can train on where
Yep.
your data doesn't go out into the domain for Bard or ChatGPT. The confidentiality of that information is really crucial, and but there's opportunity. So some of that with the generative AI, we're used to that on sports. Sports news articles, like it tells you about the game, it's summarized. Those are like sometimes almost not reviewed at all by a person, right? The information's captured in it, spits out a report, and you're like, hey, this is a great kind of a basic report on who won the basketball game. But those capabilities can help with, at least perhaps crafting a draft of some of the information that Treasury may be reporting. Now, you're not going to send it off without review for sure, but sometimes it can be pretty quick at pulling up and analyzing material and writing some information. So I expect that in broader finance too. That was not necessarily an area I expected.
Yeah, it is becoming just a way for people just to work more efficiently as well. We talked to a group of treasurers at a peer group session who were using Microsoft's AI in sort of a pilot mode, and they were using it in a lot of cases just to speed up the creation of internal presentations. They had all their slide decks loaded into it, and a lot of their presentation type material, information about their company, and they were able to use AI to really speed up just the creation of those presentations for them. So yeah, just any sort of efficiencies you can gain, I know are appreciated in the Treasury space, where you're always working with small teams, limited resources and things like that. So maybe that's driving a lot of the interest in the topic itself. But in terms of APIs, maybe we talk a little bit about that too. Just a lot of that's a topic that got a lot of attention as well in terms of organizations wanting to connect up to their banks through APIs, get real-time cash reporting, maybe explore use cases around real-time payments. How has that sort of matured since those technologies were sort of first became kind of mainstream? Is an API strategy really right for all businesses these days, or is there some sort of maturity of the technology that still needs to happen before fully adopting APIs as your bank connectivity strategy, do you think?
Well, you said API strategy. So an API, there should be an element of API for your connectivity strategy for sure. Should it be API only? I don't think so. I don't think there's, unless you only have one bank, one system, and they have APIs that work all the way back and forth, which I doubt there's too much where that will be the case. But the fact that there's an increasing number of APIs coming out from some of the key banks, the largest banks, there's not that many really. But if you look at the largest banks, which control much of the market, have more and more of those coming out for information reporting, and then obviously there's plans and trends about adding them for payments, but mostly payments are going to be, Swift, host to host, information reporting. Increasing number of banks are coming on board, so API should be part of it, but it's not solvable for most companies just using APIs this year, maybe the next couple of years, unless it's unless you're very limited with who you're dealing with banks. So it's certainly the next trend for many things, but it's not so broadly adopted you can get full coverage. What are you seeing there?
I think we're seeing much in the same. The APIs for balance reporting are nice to be able to get a real-time balance in via API. But if you look at all the connectivity needs for, corporate, the payments APIs are really where they start to drop off a little bit. Obviously, the majority of the payments that a large corporation's doing is their AP batch payments, or their payroll batch payments that are, really not, I guess, suitable for API use at the moment. Some of the better payment APIs are just for single payment initiation, which is nice for, say, embedded finance applications and things like that, or treasury payments, but not really able to support really a large scale AP supply chain operation like most corporates are looking to do through a direct bank connectivity. So yeah, we're seeing a lot of the same thing, and that's not for everybody. Some of the banks, particularly the ones in Europe, have nice APIs that can be used for both purposes, but I think it's there's too much variability from one bank to the next to really adopt it as your only strategy for bank connectivity at the moment, for sure. So yeah, still some a little bit of maturity that needs to happen with that technology, I think, before it fully becomes mainstream for Treasury. So I think we're largely seeing kind of the same that you sort of described in terms of API functionality. Maybe sort of a bit of a loaded question here, but what do you think will have the more meaningful impact on Treasury in the next 2 to 3 years? AI or APIs? I know that's kind of a vague question because sort of using the term meaningful impact, which can be interpreted many different ways. But I guess what will drive the most benefit for Treasury? Which of those two technologies do you think in the sort of short term here?
Okay, well, I'll give my views over a couple time periods. So 1 year APIs will be more impactful than next year. 10 years AI machine learning for sure. 5 years AI and machine learning, I think. 2 years probably APIs. 3 years, I think it would be tilting towards machine learning and artificial intelligence. The breadth of what artificial intelligence can do across the sphere of what Treasury needs is very significant. One is about plumbing and one is about analysis. And there's an aspect of you need the data, but since you can get the data in other ways than just APIs, the ability and the amount of meaningful impact will fall to AI. I think for sure. There's just so much. Treasury in particular has so many needs to analyze, look at risk, and they're short-staffed. They're always short-staffed. That's not like a lot of areas in finance. And so this is a huge opportunity for Treasury to get the giant earth-moving equipment to move more dirt around, more data around. So I think that's for sure. Now, you need the data, you need to be connected to it, but you can connect other ways. You can get data in places you can use it without using APIs. APIs are great. In most cases, it's better once it's stable and up. So somewhere in the 2 to 3 year mark, I would flip the meaningful impact over inexorably over to AI, over APIs.
Yeah, I'd agree with you as well. I mean, if you think about just sort of broad trends where treasurers are trying to move to, say, real-time cash management, right? A lot of people viewed real-time cash management as enabled by APIs because you can bring in balance and transaction information in real time, but you're still left with a massive amount of data to analyze to be able to make real-time cash management decisions, which is, I think, would be the place where AI can come in to help speed up that decision process, that process of actually analyzing all that data, finding the trends, and ultimately getting you to the point where you can make an action to manage cash really in real time. So it's going to be a huge enabler of Treasury, I think, from that standpoint, and allowing them to do analytics much, much faster. But I agree with you that it's going to take some time to mature. It's largely unregulated at this point, which is leaving some people on the sidelines. Some people are, a little bit nervous to adopt the technology that's new and unregulated, obviously. And then, just a lot of companies maybe aren't in the position that they need to be from a data standpoint, a data management standpoint, to be able to really leverage AI and machine learning type technologies. So it might take some time to kind of build that infrastructure to layer these technologies on top of. But yeah, I'd say same as you, sort of the long range view here. I think AI will be transformative to Treasury for sure, in a way that surpasses APIs for sure. So. Another emerging technology that has become really mainstream in the consumer space is embedded finance. I mean, so this is a topic that is getting a lot of attention in Treasury because obviously, similar to AI, APIs, everybody sees the benefits that could be gained from embedded finance type products. In the consumer market, you have payment services built directly into mobile applications. You have buy now, pay later solutions built directly into the checkout process. There's financial products that are really just embedded into the consumer process naturally. And it's creating a really frictionless experience, for everything from ordering food to shopping or whatever it might be within the consumer space. But I haven't seen the same level of adoption yet in Treasury technology solutions, or even in the corporate space in general. So do you think we'll see a move towards more embedded finance solutions, banks, making their products really accessible within, say, treasury management systems or cash management applications, so that the businesses can kind of get that same frictionless experience that consumers get in the market today?
100% yes. We will see that embedded experience grow. It's going to be slower than the consumer side. So, it's already been behind. But our experience with things like rideshare, where all those things are embedded, the maps, everything else is embedded. Every single, I'll say, decent sized bank and every tech firm in Treasury, when you have conversations about what they're doing, where they're planning on going, is they want the embedded experience because it removes that friction that you talked about. Why, payments should be embedded, right? In the rideshare app, they're just embedded, that you don't have to think about them. You take the friction away. And so banks want to be where clients are doing their work. If they're doing a trade, their information, they want to push that to whatever system is necessary. They want to be the bank in the location. That the fintech firms want to connect to the banks. I think embedded is part of the customer journey. It's part of the strategy for tech firms and banks. And there's more opportunity because business to business workflows are more complex than what an individual needs to do. And so there's a lot more points of friction, a lot more time. And so there's more value potential than there is on the consumer side. And we're learning on the consumer side, and then there'll be a greater impact on the business side through embedded finance, embedded treasury. I know there's a couple terms, embedded banking. Each of those has different people arguing for what that means, but it's we can call it deep integration if you want, but it's streamlining everything.
Yeah, that's a good point about, business processes are a lot more complex than these consumer processes are. So the benefits are going to be much greater once you do remove all these frictions and get to this more sort of embedded model here. But it does involve, I guess, the banks a little bit, embracing like a new supply chain model where they're selling their products or making their products available through third-party applications versus sort of the natural bank model selling them on their own. So, but you think banks are open to that, even sort of excited about that sort of opportunity that might present?
Are they excited about it? I don't, that depends on the banker. But that's where things are going, and they recognize that. So you want to do it. It's kind of like the old Coca-Cola model, right? We want to be able to, within 100 yards of wherever people are, they can get a Coca-Cola or whatever I don't remember. I didn't do great at marketing, but whatever the marketing class was, it's like you have to have access, and it can be sold through a machine, through a storefront or a grocery store, whatever. You can access what's needed. Banks want to be in their experience. Where the customers have an experience? Wherever. So we want to be wherever they are. I think that's you know, banks have moved off of you have to come into a branch to do business, whether you're an individual or whether you're a corporate. It's shifted. Um, yeah, that mindset has definitely shifted. I think if it's not, that might not be a bank you want to work at.
Mhm. Yeah, I'd agree. I think that in itself is a big change, is banks being open to going outside of their traditional selling models, and and really making, like you said, making their products available where consumers are naturally. Where historically banks might have been a little bit protective and wanted to keep their clients inside their sort of ecosystem. You know what I mean? So, but
Well,
I mean,
think about this business case. This is not a shill for a TMS or TIS, but if you have people that are approving payments in there, and you got 15 different banks, and they've got to log into 15 different portals, the bank may want you to log into that particular portal to approve payments. But each of those portals has a different user experience, different process. If you go into a unified platform that handles that, now it's one process, one alert. You don't have 15 fobs. It's just you've simplified the process. Why carry around 15 phones when you can have one? And I mean, that's the analogy, right? Any corporate, once you get to a certain size, the complexity grows. You're in a lot of banks. How do you keep how do you keep things protected and efficient? It's really really hard to do it without embedded finance, embedded banking.
yeah, totally agree. Totally agree. Yeah, it's a nice shift to see happening in the market for sure. The another interesting survey result here, maybe to change topics here, is the results we saw in terms of how corporates are making their treasury technology decisions, and like really the things that they're prioritizing during that decision making process, and really how they view providers. It's really a lot of it seems to be shifting towards commitment to product. Like I think the top three considerations we saw in selecting a new technology provider in the survey results were their commitment to the time over that product, their incorporation of emerging technologies into that product, and their overall product roadmap, right? So really kind of historically, a lot of these criteria might have been more so like brand reputation, or price, even some of these other components that might have been more important to corporations. But it seems like people really have that sort of forward-looking view in terms of like, where's this company going? Is this the right company for me to be with? And just curious, why do you think that is? Why do you think the results kind of came out that way?
I think as technology has shifted, there's been this, you invest in technology, and then you reach the top value, and then it goes on the cycle. There's this whole adoption curve and uh, life cycle of a product, right? And declines over time. That's not a great investment. Something that's going to decline over time, like go buy real estate or something that's going to appreciate. And so I think more organizations are looking at this as they look at their technology, what's going to appreciate over time? Where is value going to be added? And so some of the newer tech is constantly developing at a far more rapid cycle. The way that the tech works, the way that development cycles are, they're faster. They add more value over time, just inherent in the technology. Plus, there's oftentimes some community factors. A growing community has more value because you can connect to more people, whether it's for payments or something else. I think that just puts people more in an investor mindset. What my tech decision is going to last a while. It will be a success if it's going to add more value over time. And if I'm on current tech, you know, some of the newer tech versus older technology or very older technology, I'm staying away from this tech debt issue.
Mhm.
So I think those are some of the key things. How about you, John?
Yeah, I'd agree a lot with that. I mean, there's so much new technology coming out, and it seems like the technology products are evolving so quickly that if you're a treasurer, looking to do your first time sort of adoption of a TMS or some sort of treasury technology, you're doing an Excel-based forecast today based on like 8 weeks historical actuals, but you're seeing the market moving towards like AI-based forecast, machine learning, and API real-time communications. That's probably a little bit, intimidating in terms of how you get from point A to, that final destination there. So I think people are realizing that it's going to be a little bit of a journey along the way. You're starting to hear the term treasury transformation happen more and more. These aren't necessarily one and done implementations. It's our processes are going to grow over time, and we want to be with a company we can grow with and evolve our processes over time as well, right? So, like you said, not having a depreciating asset, not something you have to replace in 5 years because it's not sort of supporting what that next iteration of your treasury transformation looks like. I think people are really kind of identifying that early in the process and recognizing that's important to the business as well. So as we look into, really, if you're looking at a project in 2024 and you're really trying to define the criteria for how do you make that project successful, I guess what are some of the things that really, would help an organization in terms of planning for a project or maybe even planning like an overall roadmap for their treasury transformation, be able to achieve desired results, ROIs, and things like that? Are there anything that we can kind of describe here, or even any like pitfalls that organizations sometimes fall into that, you can give a little bit of a heads up to avoid?
Yeah, pitfalls are good. A couple things. One is, what does your future tech stack need to look like, especially outside the organization, from a data connectivity, systems, and a reporting slash analytics level? What tech are you going to need for that? If you're going to be doing more analysis, you need to think about data far more deeply than you did 10 years ago, because data is growing. So I think you need to have a mindset of what does your tech stack need to look like. Um, the other aspect is when you're making decisions on individual tech, is it going to be inside or outside? Like, you're going to have a internally managed data lake or external. Those might be some components, but your view on the technology needs to be, what is the most current tech I can use that will meet current needs and allow me room to grow, allow me some headroom to grow. So I'm not at the end of the stage where we're in this process of, the fourth or fifth wave of tech. We're making shifts, and so you need to bet on the newer technology if it has some it has the ability to meet your current needs. Um, it's just that's going to be one of the easiest decisions. Like, does it support the use of some of these tools? Natural language queries and searching. Does it support the use of AI? How about the ability to integrate with data? All of those are essential for everything you want to do in the future. So looking back and saying, hey, this is more, if I look back 20 years or 15 years, hey, that's a much more rich feature set. How is that going to do in terms of adaptability going forward? So you want to make sure you're not painting yourself into a corner. So look ahead what the tech stack needs to look like, and then, bet on the better tech. And then do it. I think the last thing that I would say is you can put pieces in as long as they're all piece by piece, as long as they're all pointing you towards your future stack. Better to get earlier benefit than the great promise of the giant, big bang.
Yeah, I'd agree with all that as well. It's you almost have to map out that whole roadmap from start to finish in terms of where am I now, how am I going to drive some sort of immediate benefit from a tech investment in the near term, but also have that long range view on the implementation as well, and like sort of the forward looking view of where the product is going in the future and how it supports that roadmap, because nobody wants to wait 2 years to get a payoff on a treasury tech investment. You want to see some immediate sort of positive impact to the treasury team in the near term, as well as sort of supporting that more long range journey, for sure. And I think also, like, understand things like the data management strategy, understand the company's sort of upgrade path for other systems you might sort of be reliant on, I guess, in terms of feeding data into a treasury application like an ERP system, for instance. Is the company going long term towards something like a data lake strategy? Is it migrating to a cloud-based ERP, or does treasury technology going to serve some sort of role in I guess unifying, technical debt on-premise systems in terms of a data management strategy, like really understand how the data is going to get into the system and how that architecture might change in the future, I think is key to getting the most out of a treasury management application as well. Yeah, and I mean, just being overall prepared, understanding, the needs of the stakeholders involved, the different ways that the business can gain efficiencies for it within and without treasury, to really understand the full picture of how a treasury tech investment can sort of change the trajectory of the business. So it would be my kind of advice from that perspective. Yeah, so with that, I think we've kind of reached the end of our talk track here, but we're happy to answer any questions that might have come in during the course of the session here. Maybe we'll pull Jen back on the screen here and see if maybe anything was typed into the chat during the course of the session that we can answer.
Yes, thanks so much, John and Craig. That was a really great session. So we did have 2 questions come in. The first one is from Michael. In terms of creating a data structure for internal AI needs, who would be the primary stakeholder outside of Treasury? IT, finance, CFO, etc.
You want me to start, John, or?
Yeah, you could probably take first stab at this one.
Yeah, and I may not answer that head on exactly as it's answered because, the chief information officer, the data architect. I think, when we're looking at, using some type of, AI, not AI, I'm sorry. Yeah, where are we going to put, where we're going to look at this? Let me say it this way. If Treasury is going to leverage, data lakes and some of the new modern tools, they should be volunteering to help with any of the early first use cases, because you've got to stick the data in a place that can be used. There's going to be a Treasury data lake or a finance data lake, and there might be some combination of that. The key thing is to get in early, because your IT group is going to be the ones that provide a more company-wide system that they want to play out and try. And so you're going to want to leverage that. They're going to decide the platform it's sitting on if it's not going to be residing in contained within a third-party tool, a vendor tool. So jump on that, get some use cases, and start pumping that. So IT is going to control some of those decisions, but from a use case and building that, you can do that. So I would partner with them quite readily and quickly.
Yeah, I'd agree with that. Treasury is a key, I guess, supplier of data into whatever the company's data management strategy is in terms of bank data, transaction data. A lot of really useful data both within Treasury and to other organizations. And obviously that it's also a user of data from a lot of different departments. Things like Treasury probably uses more data from different departments than just about any team within the organization in terms of FP&A data, accounting data, AP data, AR data, all of this payroll data all feeds into sort of what Treasury is viewing on a day-over-day basis to get that full, sort of cash picture there. So but at the end of the day, where that data is going to land and where it's going to be pulled from is a data management and IT decision, obviously, that's driven by the team there that's sort of formulating the organization's data management strategy. But at the same time, think about how that data could potentially be used. The whole point of this of a data lake is to break down those silos and make that data more accessible. So transactional data is valuable to accounting for reconciliation purposes, or trending information that Treasury might have within their cash forecasts about patterns of cash receipts and cash disbursements is valuable to the AR and AP departments to understand their customer and payer behavior as well, right? So I think that's the key. That's how you get it right, is you understand how to both aggregate that data, but then use it really, effectively cross-departmentally within the organization.
Yeah, one other thing, you talked about making the data accessible. There's also the other side of that coin, which is security, and not making it so that the confidential material can get out, or people can. Yeah, I mean, there's some aspects of managing that too, right? We've gone from data's too slow, it's too hard to see, to now we have to control and limit access. The principles of least privilege on some of that data is also essential.
Great, thank you. Michael says thank you as well. Last question comes in from Maya. We're planning a Treasury Tech implementation for 2024, but our banks aren't yet offering APIs that meet our full needs. How can we integrate with our banks now using legacy protocols without preventing ourselves from moving to APIs in the future?
That's a good question, and that's definitely I think that's a spot a lot of different treasury organizations are in today. They're not ready to fully adopt some of these emerging technologies, but they also don't want to be left behind or be put in a place where they can't adopt them in the future. So, and actually, this might feed into a little bit of the trend that we saw earlier in the talk here in terms of the survey results. Organizations leaning towards like an aggregator type strategy, which is a great one for sort of addressing some of the concerns that were raised in this question. Through an aggregator type software, all your banking activity could be made through a centralized sort of hub. And that might be a mix of API protocols and legacy SFTP connections, whatever it might be, sort of feeding data into that hub. But then from a business standpoint, in terms of how you're interacting with that data, you can do that through APIs, right? So you can do that through the provider's APIs so that you're integrating with a treasury management application, a forecasting tool, an ERP, whatever it might be, through API-based communications. And that puts you in a good spot so that, in the future, if those protocols mature and you want to swap out, say, a host-to-host connection on the back end for an API connection, you get more real-time data, right? But you're not touching anything on the other side in terms of the way that your system's interacting with that bank data. So it kind of provides a sort of streamlined way in terms of being able to, migrate connectivity protocols without really disrupting the whole picture. So that's one suggestion we've been making to a lot of organizations who have that same exact concern.
Yeah, I think I agree with you fully. It's the issue of prioritization. You want the most modern, most information-rich, formats and connectivity types that exist, but you have to be able to get stuff. And so if you isolate, if you have a lot of those connections, you want, water coming into your house with one pipe, not 50 pipes. You want electricity coming in with one line to your fuse box or your breaker box. Those are good ways to simplify things for companies that become increasingly complex with 10, 20 bank connections, et cetera.
As we wrap up things here, Craig, thanks a lot for joining the conversation here today. I thought it was a really interesting dialogue, and I think we got to cover a lot of ground, a lot of different topics in terms of what's on Treasury's mind for 2024. So appreciate you joining, appreciate you sharing your views on all these topics. And thanks to the webinar participants as well. We appreciate you guys joining as always. I hope you enjoyed this session. You got to catch a couple of the other ones during the course of our 'Tis the Season webinar run. If anybody has any questions after the webinar, feel free to connect with myself or Craig. We're always happy to catch up offline on any of the topics that we've discussed today or any other topics that are on your mind going into 2024. But otherwise, thanks again, Craig, and thanks to everybody, and we hope you have a good rest of your day.